I want to find out about the micro and the macro when it comes to the Irish commercial property market. How did it do in 2019? And what do the experts predict for 2020? So I've been told, Conor, you're the man in the know about the Irish commercial property market. How was 2019?
Well, I suppose on the face of it, it was a fantastic year. Very, very strong numbers across most sectors. 7.2 billion traded in the investment market, strong numbers in the industrial market, the office market. Retail probably a little bit weak, going through a funny phase at the moment. And then PRS, the private rental sector, very, very strong.
The investment market 2019, how did it perform?
I think it's fair to say that it was an exceptional year. There is a large wall of institutional money effectively funneling into the Irish market. 75% of the total investment spend was from overseas investors.
Wow, that's a big number.
It's huge. There was actually 18 deals in 2019 which were in excess of 100 million euro. So it's a year which is categorised by the year of the mega deal. It's been quite a one-off, I suppose.
Why would you say investors are attracted to Ireland?
The yields on offer in the Irish commercial property market are still very attractive. And if you're dealing in hundreds of millions of euro, a couple of percentage basis points makes a significant difference to your return. You also need to consider the wider macro economy in terms of the low interest rate environment and the general good news story in terms of GDP growth, and the fact that we are a tech hub and one of the last few English-speaking countries in the EU.
That's an interesting one, isn't it?
But then when you actually peel it all back and you look at the sub 20 million euro market, which I think is more a domestic, the domestic investor, and indeed 70% of the buyers last year in that sector were Irish. That's struggled a little bit over the last 2 years.
Well, why is that?
One is Brexit, right? There's uncertainty here. Nobody likes uncertainty. And then the main reason is things have got too expensive in our view. And we talk to buyers every day, and we have a lot of people on our books who want to buy investments, but they're all saying, look, things have got too expensive because we've had rental growth for 5 or 6 years and we've got yield compression. So when you get rental growth and yield compression, capital values blow up.
If we look back to, say, 2016, when we really started delving into this, the total spend was approximately 950 million euro. And this year, that tumbled to about 695 million euro. And year on year, I suppose, we've been seeing probably a 20% drop in the number of transactions happening in the sub 20 million euro sector.
We have a saying in our office, it's called price counselling. We're going to the vendors now, they're saying they want 5 million for their investment. We're saying, look, it's not worth 5 million. It's probably worth 4.75 million. And in order to get that, you need to put on it 4.5 million. And if people perceive there being a bit of value there, they will look at it. The more people you have bidding on it, the better the price is going to be.
How did the office market perform in 2019, Lisa?
2019 was another bumper year, it's the third consecutive year of reaching levels well above the long-term average. 2019 reached 3.2 million square feet. Long-term average is about 2.6 million, so we're well above those levels, even above the boom time levels.
Who's in the market?
The TMT sector drove the market. They accounted for 4 of the 5 top deals. In addition, a new trend is that they're also now looking to the suburbs to buy locate. For example, Facebook took 175,000 square foot in Sandyford. Google are in the process of taking 80,000 square foot. We see the other tech companies following suit in order to buy locate also.
The younger people who started in Google 10 years ago liked to be in the city centre because they wanted to go to the bars and they wanted to be social and have fun. Yeah, exactly. So, but these guys all grew up and they probably met somebody and
kids and all that.
They've got kids, so now they're going to buy the house out in the suburbs. They don't really want to come into town anymore. Occupancy costs in the suburban market would tend to be 50% of what they are in the city centre.
So it's less than half. It's half of what it would cost to be in the city centre.
It's half of what it would cost, yeah. So if you look at 100,000 square feet in the city centre at 60 euros a foot and 100,000 in the suburbs at 30, it's a big number every year.
The industrial sector, how did that perform in 2019?
The industrial sector witnessed another great year with about 3.5 million square foot of take-up. The year before was about 4 million, both well above the long-term average.
Where were industrial rents in 2019?
Prime rents just above 10 euro a square foot, getting close to a level which makes sense for developers to spec build. Not quite there yet for large chunks of space. So we're seeing a lot of developers adopting a build to suit. They'll clear their site, they'll get their planning, they'll wait for a pre-let and they'll build to suit what the tenant needs.
So what's actually driving demand at the moment?
A couple of different sectors. There's the logistic, the pharmaceutical, the food manufacturing. We're seeing the logistics market linked very closely to online shopping. The demand then is for distribution units, storage units, so all feeding into the industrial market and increasing demand for good quality space.
You just have to look at the news that the high street retail has been having a really difficult time. Is that reflective of 2019?
Yeah, I think it is. I mean, there was very little money invested in retail in 2019 in Ireland. It was the worst performing sector. The advent of online has changed things. There's no doubt about that. Jenny Donnelly, my colleague, did a report on the retail market last year from the retailer's perspective. And what they're saying is, look, they need to adapt now. They need to change.
Your standard physical store presence has moved more so maybe to an online, and we've seen a surge up to about 13% now with online sales.
13% as compared to a year ago?
It was about 10%.
Oh,
so
it's
gone up about 3%. So from speaking to a number of retailers, I suppose the key message is to actually adapt to it and invest in the online. So rather than seeing it as a threat, use it to balance your in-stores. So you still have your bricks and mortar, and it's about, using your click and collect to still get people in store.
So, I mean, even though there's been an awful lot of negative press about retail, especially kind of the high streets, there's actually a lot of positivity there.
Yeah, look, I think it's certainly looking at the opportunity. I think there's probably been a shift in trends, which, has worked positively for a lot of retailers. The food and beverage sector, the leisure sector has seen quite a strong growth. Things like your pharmacies, your butchers, where you can't obviously buy online. People want to go in and, sample the perfume or want to go in and maybe speak to the butcher directly. So I think we've probably seen a shift into, your kind of well-located neighbourhood schemes doing quite well. So there's parking sort of right outside the door. And it has a good tenant mix. So I think, also that's what consumers are looking for. We have seen that whereby they're well located, vacancy levels are low, and there is, quite a demand for it.
In a nutshell, 2020, what's that going to bring? And I'm going to play this back to you at the end of 2020 so I can hold you accountable. Yeah. What do you think is in store?
I expect a steady performance from the office market. I think rents will be steady in the office market. I expect a good performance from the industrial market.
Industrial is definitely a sector to watch, particularly with the planned rezoning of Z6, which is the typical industrial zoning, to a residential zoning, which will be a higher site value and will push the industrial sector outside the M50, where land values are lower, which will result in new industrial parks of higher quality. So it's definitely a sector to watch.
2020, what do you think is going to happen then in terms of the investment market?
The income is going to fall ultimately because last year was a record year at 7.2 billion euro. But we predict that we're going to be significantly ahead of the 10-year average of 3 billion euro. There may well be some further yield compression in the prime office and PRS private rented sector areas. But I suppose the interesting one, which everyone is talking about, is the retail market.
Consumer behaviours, consumer sentiment has all a huge part to play. So it's about adapting to your consumer, making stores accessible, creating that experience really in store. It's what people really want now. We've seen a lot of redevelopment happen. The Blackrock, Frascati, the Pembroke district in Dundrum. So we've seen a lot of landlords and investors actually look for that opportunity. So you're reconfiguring, redeveloping retail.
I think PRS and build to rent. That's a very strong sector last year, and I see it being a strong sector this year in the Irish market as well. There's a lot of money chasing PRS. It's a defensive play in the investment cycle. There's a lot of people getting into it as well in terms of getting planning for apartment blocks and residential schemes, with a view maybe to selling them on to an institutional investor.
So you're positive about 2020, are you?
Yeah, I mean, look, there's a lot to look forward to, I think, in 2020. I'll be positive.
I will be too then.